the Financial Survival Network, helping you to survive and thrive in the new economy. To find out where to buy gold and silver reliably at great prices, go get your free Financial Survival Toolkit at financialsurvivalnetwork.com. You'll also get our complimentary newsletter. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. Wondering about the euro, wondering about energy prices, gold, silver, what the Fed's doing next? Jason Burack's here to expound. Hey, Jason, welcome back to the Financial Survival Network.
Thanks, Kerry. I'm glad to be back.
Always a pleasure. So a lot of interesting stuff going on right now in Europe, isn't there?
Oh, my God, yes. And, it seems like things just literally shift daily here. And you have these politicians literally put out one thing in the news just to see we might do a bailout for the Spanish bank. But 2 weeks earlier, the Spanish finance minister said the Spanish banks weren't going to get any money. So this is just, normal political posturing. Once you really understand the nature of politicians, you understand that these guys are hypocrites and they will do or say anything to get what they want.
Imagine that, a politician who doesn't tell the truth. Never heard of that before. Yeah, I love it. It's like, oh, no, we don't need a bailout. We don't want a bailout. We're not going to take your stinking money. And then a month later, they're crawling to the table begging, right?
Exactly. And there's a really good argument that Spain, Greece, a lot of these pigs countries should have never been let into the euro in the first place, especially by the bylaws that they wanted to design the euro. So let's expound on that further. But before we started recording, I told you that I wanted to go back for your listeners and actually do some historical stuff about why the euro was established and why we're at this point. Right. So let's do that now. After World War II, Europe had literally been bombed. All their manufacturing base had been destroyed. So the United States put in the Marshall Plan, and they wanted to help rebuild Europe. And a lot of money was spent, the U.S. taxpayer basically and the Federal Reserve helped fund this. And we wanted to get Europe back on its feet basically so we could sell them products and services, I guess. That, part of the reason. And so, as we were rebuilding European economies, part of that trade-off, I guess, was the European countries had to buy U.S. treasuries. So, that led to the stuff in the 70s. Where, the U.S. was running really bad budget. The U.S. had really started to run bad budget deficits with the welfare warfare state from the 60s. And then, Europe just got tired of it, and they got tired of propping up the dollar. So it took over a decade, I would say, of planning, and they came up with this euro. And the euro is designed as basically a competing currency against the dollar. It's not designed to prop up the dollar. It's designed to directly compete with the dollar. And the euro has fundamental issues, which we can talk some fundamental problems. But in theory, it should work. There's bylaws here with the euro, and there's this really great article your listeners should really read. It's on Mises. It was last week. It's called An Austrian Defense of the Euro. If people want a completely in-depth article outlining some of the reasons why the euro was created, why it could work in theory, and some of the problems with it. But anyways, though, with the euro, some of the problems that the euro has is, these politicians, the euro was designed so countries inside the EU could not run trade deficits and budget deficits, but they put countries in there, through investment banks like Goldman Sachs, rearranging the finances and rolling up the debt into these derivatives that should never have been in the euro in the first place, that already had massive budget deficits. So the euro in its current existence, I really don't think it's going to exist 2 to 3 years from now. I think it's going to have to change, but I don't think the euro is going to die per se.
So you think it's going to be around in a different form? They'll just get rid of the weaker players, the Spains, Greece, Ireland, Italy, they're going to get rid of Italy. I mean, Italy's a huge economy that can bring that whole thing down to its knees in a matter of moments because they have so much debt.
Exactly. Well, I don't know for sure about Italy, but I think the euro can survive getting rid of Greece for sure, and possibly Spain. The problem is, if all those countries are going to stay in the euro, they basically have to rely on the German economy to carry all of them. So the German taxpayer, the German saver, is going to be bailing them out. So I don't know how long this is going to last, because you have a divergence here, especially in Germany, where you have the German manufacturers and the German politicians who are all basically pro-euro, and then you have the German citizens who don't want it. Because, you know, the German citizens are waking up. Germany has a very long experience with bad inflation, and they see, you know, the road that this is going to lead on, that the currencies are going to have to be devalued, that they're going to have to bail out all these pigs countries with their politicians, and it's just a disaster. But like, the whole reason the euro was implemented in the first place was to compete against the dollar, like I said, as a competing currency. In theory, it should work. It was meant, if you read the Mises article, it was meant as sort of a gold standard to prevent politicians from running these massive trade deficits, from running these massive budget deficits. But the problem is, they let in countries that had already had these budget deficits. So that's a lot of the problem. And another thing that you're also seeing in the Eurozone is you're starting to see, especially in France and Greece, you're starting to see these politicians from the far left and the far right. And these guys, you know, they're not rational people. Obviously, they're using pretty similar Keynesian economics or worse compared to the other politicians. But these guys are Lenin, Stalin, Hitler types, some of them. They have those types of roots. So those guys will change the rules. You know, if the rules say that the euro, that politicians can't spend this or do that, these guys don't care about the rules. They will do whatever it takes to get what they want. And that's what worries me, because, you know, even in France, you have this guy Hollande who was elected, and he's supposedly this nice, good, bleeding heart, you know, socialist, social justice guy, but he wants to tax everyone in France, I think 75% or some ridiculous number. You know, that's not going to create jobs in France. That's not going to solve France's unemployment problem. That's going to make things a lot worse.
No doubt. That's what politicians always do. And, you know, when the euro was created, Milton Friedman gave it 10 years. And here we are a little past that, but exactly what he predicted has come to pass, because these countries have different interests. They should have different interest rates. They were all allowed to take on their own sovereign debt, and creating debt, as we know, is effectively creating money. And that's what they've been doing ever since this thing was founded. So it might have been founded, Jason, with the best of intentions, but what it's turned into is something far worse and perhaps more pernicious than even the Federal Reserve.
Exactly. And but if I could add one thing, it's actually not propping up the dollar anymore. You know, originally these European countries, after the Marshall Plan, these guys for a long time, for decades, were those trade surplus countries that were running basically dollar pegs, and they were, you know, buying the U.S. Treasuries, recycling their reserves in there, and they were propping up the dollar so the U.S. could continue to run these budget deficits, these trade deficits, et cetera, without the Federal Reserve monetizing all the debt. So that's why the euro, one of the reasons why the euro was created, is because the European countries were tired of this. And of course, that torch for propping up the dollar passed, you know, to Japan, and then Japan's economy tanked. And now a lot of the trade surplus, the propping up the dollar, is to China and to the OPEC countries.
Yeah, well, these fiat currencies are just basically a rendezvous with destiny, because you can't create something out of nothing indefinitely and expect this thing to work out okay. So we're at the end game. Fiat currencies, end game. And they could call it whatever they want, but I just don't see a future for this type of thing.
Exactly. And to add another point, once the euro was established, if you look at a chart of when the euro was established, you can basically see the oil and gold, those types of commodity prices start to go vertical.
Yeah.
So the dollar lost a lot of its support then, and other countries had to come in and start propping it up more. But that besides the fundamental demands in emerging markets for more commodities, you have these paper fiat currencies which are driving commodity prices higher too.
Yep, no doubt. And when we talk about higher commodities, immediately we think about oil, and oil's been doing the converse lately, hasn't it?
Yes, unfortunately, and we put out our petro profit report a month or so ago, and it's a really great time to be buying oil if you are a contrarian. But unfortunately, the majority of people are not contrarian investors. So for your listeners out there who have done their homework on the oil market, understand the long-term supply-demand fundamentals, understand that the Saudis cannot continue producing 9.9 million barrels per day, to flood the market with cheap oil. They cannot continue doing this for a very, very long time, especially because a lot of the oil is marginal and it's not light sweet crude. So I would expect oil to easily rebound sometime in the next 12 months for sure. And I think oil is going to take off with gold and silver once that next quantitative easing or stimulus or whatever they decide to call it now comes.
Yeah, well, I had a guest on recently. He said no matter what, they're never going to call this thing QE3, whether it's an extension of Operation Twist and Shout, whatever it is, it's going to be called something else because it's all sleight of hand, right?
Exactly, but it's still going to be either a combination of one or two things. It's either going to be buying more treasuries to mess with the yield curve more to prevent those mortgage-backed securities like the Alt-A's and the option arms from resetting, or it's going to be to monetize more long-term treasury debt like this recent Operation Twist was. And if I could talk about the Operation Twist for your listeners, in my opinion, the Fed did the absolute bare minimum. Okay, the Fed did basically nothing. They did the absolute bare minimum, and they're waiting to see what happens. They really don't want to get involved too much in the markets before the November elections. So in a perfect world for central bankers, the Fed would like to not have the markets crash before the November elections and wait until that afterwards to do, the next stimulus package, whatever they're going to call it. Okay, so the Fed doesn't want the market to crash, and they don't want to intervene in the elections, but they're just going to sit back and wait, and they're going to watch the leading economic indicators here. And if you listen to the comments from a lot of the people like Janet Yellen and Ben Bernanke, they're really watching these LEIs, these leading economic indicators, more than they ever have in the past. So I think your listeners really need to learn about the leading economic indicators, and there's the normal set of leading economic indicators that the Fed relies on, and then there's also other sets of LEIs from other economists like the ECRI and also like Wolf Trahan, which is a research firm. So those are the types of things, and right now the LEIs, some of them are bad. They're not like crashing or anything quite yet. Some of them have started to roll over, signaling recession, like the ECRI. Earlier in the year, the ECRI stuck to its guns about the recession was we were still going to have a recession, and they were looking like they were going to be wrong for at least 4 or 5 months. And now the ECRI is being proven right about that. And once these LEIs start to roll over, that's when that stimulus will come. In a perfect world, like I said, though, the Fed would not want to do this before the election, so it looks like they're not interfering. But they don't want the markets to crash, because if the markets do crash, then it looks bad too, and it looks like they don't want Obama to get reelected either, I would say.
Well, that's a story for another day. We don't talk about politics on FSN as a rule, but I would point out to the fact that gasoline consumption is dramatically down in the U.S., electrical consumption in China way down, which is considered one of the pure economic indicators that isn't really subject to Chinese government manipulation. I would argue that we've never had a recovery, that this recession, which some might even go so far as to call a depression, is continuing unabated with nothing there to stop it. Do you agree with that?
Yeah, I agree. But what they've done with the statistics is they've allocated enough money, thrown money at some things to make a little bit of job growth here and there. But in general, though, like the whole economy, like you said, the whole private sector is in a lot of trouble. To add to that about what you said in China, we're starting to see in developing countries with China where they've started lowering rates. And I think in China, you're going to start to see a stimulus package here pretty shortly. Sometime in the next 6 months, you're going to see, I don't know if it's going to be as large as it was in 2009 after the markets crashed when they injected a massive amount of stimulus. But I think for sure we're going to see in China a stimulus package. And you're already starting to see future QE announcement plans from Japan, the UK, etc. So Ben might be... the Burack might have to retaliate after that as part of the currency wars. So these are things your listeners need to take into account for. We're just going to have a lot more volatility in the markets. I mean, with the whole treasury market the way it is now, especially with the Operation Twist and the curve and the just blatant manipulation in the treasury market, which I think is probably the most rigged market of any of the markets. I really think your listeners should be very careful. I know a lot of people out there are telling people to buy TBT, which is that short 20-year treasury index instrument trading vehicle.
Right.
That thing has gotten slaughtered. And with the amount of manipulation in the markets here, like we're not going to have those free market forces where interest rates might rise significantly for a certain amount of time, especially if the Fed can keep, figuring out other ways to monetize debt, or these trade surplus countries like the Saudis and the Chinese are going to continue to buy debt, as part of their US dollar pegs to prop up the dollar. So if for shorting ideas for your listeners here who want because the real economy is not doing good, they should focus on consumer discretionary. These companies are getting killed. Focus on some of the banks maybe, and then focus on consumer discretionary. Some of these companies like a Best Buy, a Sears, a JCPenney, these companies have not fundamentally restructured their business models. Okay. These guys are still trying to build big box retail stores. They're not closing them fast enough. They're not adapting to the Amazon business model. So I would much rather be buying puts on, say, like a couple, of these companies here that are really reliant on massive consumer discretionary spending, which we have a tapped out U.S. consumer here in the United States, rather than trying to short treasuries, which is a rigged market. Because, in these consumer discretionary stocks, they have to deal with free market forces. Okay? Mm-hmm. They have a lot. There's a lot more free market forces in there. There's going to be no bailout for a Best Buy, probably not, or Sears or a JCPenney or something like that.
You mean we're not going to get flat screen subsidies? And because I know for cell phones, we're spending $2 billion a year in federal subsidies so people who can't afford cell phones can have them. So a flat screen subsidy, I could see it in the cards. Anyway, Jason, we got to get going. Always great to have you on. Find out more about you, the Petro Report. Where do we go?
For the oil report, you can go to petroprofitreport.com, and for our main website, it's wallstreetformainstreet.com, WALLSTFORMAINST.com.
All right, excellent. Well, we'll talk to you again soon. I'm expecting that there's going to be a debt fight to expand the debt cap in Congress before the election. It's going to be bloody. It's probably going to result in another downgrade for the U.S. debt. And we're just not going to see a lot of improvement in any score. The best we can hope for, I think, is that things just don't go from bad to extremely bad and worse. So on that note, hey, keep smiling. We'll talk to you again soon.
Thanks, Kerry.